What is up, degenerates? Happy Red Day. It is Thursday, November 13th. Market is closed. What happened today? Well, we were down. Unless you own inverse funds, which I talked about yesterday, and if you bought them this morning, you'd be in good shape. I do own Fiat, the inverse on Coinbase. That was up today. I want to talk about the VIX. That is the volatility index on the S&P. This is a 4-hour chart, and you see 8:30 this morning, it shot up. I call this the fear index. When this goes up, market goes down. It shot up. This is 4 hours, 8:30 to 12:30. This big green bar here, stochastics way up. It's hard to use stochastics on this index, but I do like to show it. So way up, the fast stochastics after 12:30 dropped. And you can see this red bar. Again, this is 12:30 to 4:30. The slow stochastic is still rising. We could look at a 2-hour chart or whatever to see what's going on there. But I think after market, things look better. And I think things went down so much, so fast today, tomorrow will be a green day. Profit takers, people that were short, are going to close their positions, make some money. But it's good for our, we track option income ETFs. When it goes up like this, our premiums are great. And so all the covered calls, are making money. So that's all I got to say about that. But anyway, it's at a pivot point. It could go up or down from here. But the last, from 12:30 on, the VIX was down about 2%. Before that, it was up 13%. And, we'd like to see under 20 on the VIX. It was 20.59 as of 12:30, and now it's back under 20. We'll kind of keep an eye on that. But anyway, that's kind of how you can monitor the market and see what it's going to do. We knew at 8:30 this morning, it just shot up. We knew the fear index. People are going to sell. They sell when they're afraid. Why are they afraid? Number of things. The government shutdown, that's ended, but there's still some work to be done to get it fully reopened and back to normal. We don't have, the employment numbers and all that. Everything's been not reported. We don't know about rate cuts in December. Is it going to be cut? I'm hearing 50 basis points now. It was possibly 25, possibly none. So we'll see. It's the market. I'm not afraid. I keep buying. I do use margin, but I'm still low risk for a margin call because I'm not crazy about margin. I just use a little. And that's where we're at with that. Let's talk about declarations today. First, we have Maggie from Roundhill. Maggie was down 2.11%. Mags, the Roundhill Mag 7 was down 2.56, so they weren't down as bad. Only captured 82% of that loss. They declared 38 cents, up from 37 cents. That's a 35% yield. So that's good. That's a Mag 7 fund, so, a little more stability there. Who else declared? Tuttle. Love Tuttle, and I'll show you why. They only have 2 income blast funds. I expect more to come out. 0 DTE on IBIT is BITK. They were down 2.86. It was down 3.47. So they only captured 82% of that loss. And they look steady now with distributions. They declared 18 cents. It's been 18 cents, 18 cents, 18 cents. 47% yield. MSTK which is their strategy fund, it was down 6.86, but strategy was down 7.15. Again, strategy is a train wreck, but they're getting to the point where the price of strategy and their outstanding shares, I haven't looked it up, I should have. It's their net asset value is almost less than the Bitcoin they hold. Now Bitcoin's down, but the book value, I think they're at a bottom. Again, not financial advice. Consult a financial advisor. You know the drill. This is for information, entertainment only. So they didn't lose as much as Mr. And their last three payments have been 50 cents. 50 cents, 50 cents, 50 cents. 135% yield. I love it. Don't own it yet, but I will. Trust me. So that's Income Blast from Tuttle Capital. Check them out because that's, I love what they're doing. Anyway, let's go to Yieldboost. Everyone wants to talk about Yieldboost. And Yieldboost, you'll know, on a huge down day, they do much better than their underlyings because they have that protective put. They sell a put for income. They buy a put in case things go down, so they break even at that lower strike. So COYY, well, all their underlyings are double leverage. CONL is the underlying, down 13%. COYY only down 6%. The Robinhood double leverage down 17%. HOYY down 8%. Again, they capture about half of the loss. TSLL was down 13%. TSYY was down 7%. SMCX was down 15%. SMYY did much better, only down 3%, almost 4%. AMDL was down, that's the AMD double leverage, down 8%. AMYY only down 0.25%. They only captured 2% of the loss. So these funds are great in a down market because of that protective put. So I love Yieldboost. I know a lot of you love Yieldboost. They paid yesterday. Normally they pay Tuesday because of the holiday. They paid yesterday. I dripped them all today. So I bought more shares of the ones I own. COYY, TSYY, and NVYY. But thinking about adding more. So we talked about AMD fund, XBTY. BitX was down 7. XBTY only down 3.5. NVDL was down 7. NVYY down 1.75. 24% capture of the loss. So that's good. These are great. The Palantir double leverage was down 13. PLYY was down 5%. These are all percentages we're talking about. Alibaba was up today. BobX, their double leverage was up 2.43. BBYY up 0.78. 32% capture of the gain. Again, they're not going to capture the upside. They're not going to capture as much as the downside. So, and they're paying massive yields. We'll get to those in a minute. MSTU, double leverage micro strategy, down 14%. Again, strategy's a train wreck. We know this, but I think we're going to see some clear skies ahead. We'll see. Not financial advice. Down 14%. MIDI, MTYY, it's like Misty with a lisp. MIDI was down only 0.38. They only captured 2% of the loss. So you see where I'm getting at. TQQQ, the Qs, was down 6%. Again, double leverage. TQQY from Yieldboost only down 1.96, only captured 31% of the loss. SPXL on the that's a 3x on the SPY, basically, and the S&P was down 4.95. YSPY was only down 1.19, only captured 24%. AMZZ, which is Amazon, double leverage was down 5%. Yieldboost AZYY was up 1.66%. So the underlying was down, they were up. So they got that sweet spot with the put credit spread. FBL double leverage Meta was up 0.17. FBYY was down 0.24%. So pretty flat. MRAL, Maze, as we call it, it's Mara double leverage, down 22%. Maze was only down 0.44%. They only captured 1% of the loss. And then IONL double leverage on IonQ, huge volatility there and huge payments, as we'll get to. IONL was down 21%. The Yieldboost fund was up 5%. So massive, and paying massive yield. So let's look at that. Go back to the top. COYY went from 37 cents. They declared today 34 cents. This is payable Tuesday. That's 160% yield, the winner of Yieldboost. HOYY, 58 cents to 54 cents, still 144% yield. TSYY, it's now my biggest holding again. iKoi was my biggest holding, but because of the price drops today, and I added more TSYY today, that is now my biggest holding again. So iKoi is now number 2. Coney number 3, YMAX number 4, just in case you want to know. So TSYY went from 20 cents to 18 cents, a little disappointing. It's been 20 cents pretty steady, but it's still 148% yield. SMYY went from 56 to 52 cents, 148% yield. AMYY went from 49 cents to 48 cents, 101% yield. Again, that's average of the last 3 where I get the yield, in case you guys didn't know. XBTY, 28 cents to 27 cents, 106% yield. You see more 100%ers with Yieldboost than any other, company that we cover. NVYY went from 43 cents to 42 cents, 101% yield. PLYY, that's their, the Palantir double leverage fund, 43 cents, steady, 100% yield. BBYY on the double leverage Alibaba, 43 cents to 40 cents, 104% yield. Again, the IVs are massive because they're double leverage, and they try to pay close to the IV, and they're doing it. So we talked about MIDI, MTYY on double leverage strategy, 29 cents, 25 cents, 115% yield. TQQY, 27 cents down to 16 cents. That's now a 61% yield. But again, that's an index. That's the Qs. So you're not going to get the massive yields, but you're going to get good yields and a little bit more safety because it's an index. Again, not financial advice. YSPY went from 19 cents, 18 cents, 18 cents, 50% index fund. AZYY, 23 cents, 23 cents. Before that, it was 22 cents, 49% yield. That is their worst performer, and that's almost 50% yield. So, just saying. FBYY went from 22 cents to 20 cents. That's 54% yield. Maze went. They only paid twice now. 67 cents and 58 cents. 154% yield. Solid. And the IonQ we talked about, double leverage IonQ, which is IONL. Second payment, second declaration was today. 70 cents to 68 cents, 148% yield. So as a whole, Yieldboost is paying 109% if you own an equal amount of all of them. That's huge. And as a whole, on average, they were down 2% today, 2.07. Their underlyings were down 10%. So they only captured 19% of the loss as designed. These are great funds, way capped on the upside, but on a down day, they look good. Some are even up. So that's Yieldboost. QLDY, that's Roundhill, right? No. Defiance? I can't keep them straight anymore. Yeah, Defiance. Lightning spread on the. Let me zoom in here. They're $50 even. They were down 2.31%. NASDAQ was down 2.05. You'll notice a lot of these, and I'll get to this in a minute, as far, everyone's moving out of Alti from YieldMax and moving into WPay, QLDY, K-Yield from Curve, which I like, just not degenerate enough for me. You guys know me. But I'll talk about that in a minute. But they pay twice a week, and it's solid. 19 cents, 19 cents, 19 cents. 40% yield. So very steady distributions. As far as the price, the NAV, it's pretty consistent. I'm going to talk about that in a second. In fact, I'm going to do it now. We talked about the VIX. Over here, let me get rid of these indicators and go to a daily. Bear with me here. Just delete. All right, let's go. Oh, we don't have Q. Let's add that. QILD. That's right? No. Didn't add it. QLDY, that's why. Sorry. I already forgot it. I get the maybe I'm dyslexic. QLDY. QLDY. There it is. And I want to add it to my comparison. QLDY. Did it add it? Okay, so compare kind of the where the hate is, where the love is, and compare the funds. Let's talk about the worst one. ULTI, Ulti from Rex. Again, that's 4 hour. Let's go to daily. They did the worst today. Daily. This. Down, 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 down. Remember, this is supposed to be the Ulti killer, the YieldMax Ulti killer. Doesn't look. I mean, they paid a great yield. I believe it was 80%. First declaration pays tomorrow, I believe. But anyway, down 16% today. 15.27. Ulti from Max was only down 3.65%. Still not good, but held up better than ULTI, down 16%. WPay down 4%, worse than Ulti. KYLD, K-Yield. And I love Howard Chan. I love his strategy. You guys just know the yield's not degenerate enough for me, but I do follow it. I may add it to my spreadsheet. I think it's a good growth fund, but today, the last couple of weeks have just been a bloodbath. So they picked the wrong time frame to launch. I think they'll do fine in the long run. But anyway, down 5%. QLDY down 2%. So they did the best of these funds that we cover. Let's get a little bit broader. Yes, very choppy. That's the QLDY lightning spread NASDAQ. So they did the best, down 2.31%, but Ulti did second best, down 3.65%. The rest, ULTI, not good. I love their strategy, but they're picking high IV. They're doing a neutral strategy on high IV underlyings. And I've looked at some of the holdings, and when they got into the fund, when they bought into that underlying, again, they do a sell call, sell put for the income, and then a buy call, buy put out of the money for protection. But they're getting blown through. So that's why you see the drop. But the yield is good. It was 80% when they declared. So I think with the price down now, the yield is even higher. In fact, we can look at that. That's a Rex. Ulti down 15.27 according to Microsoft Excel. They declared 35 cents. That's paid tomorrow. 70% yield. So that's not bad. It's different. So, I like the strategy. I don't own any Rex shares yet because most of them are growth and income. But this is what they call their income max fund. And 70% is no joke. So, we're looking at that. Let's talk about predictions for tomorrow. Only declarations are going to be from Roundhill. They have a declaration every day on something. And tomorrow it's their single stock ETF, covered call ETFs. They're a little leveraged. They don't do covered calls on all their synthetics. So you get a little more upside. You also get a little more downside. So let's talk about... let's go back here. AAPW is their Apple fund. IV's 23%. Let's go one more. Average is 26 cents per share. Last three. We're giving them 23 cents. 28% yield. AMDW, their AMD fund. Average is $1.20. We're giving them 98 cents because the IV's not there. IV on AMD is 56 now, and they're paying 89%. So I think that's going to come down. Amazon, AMZW. Average is 38 cents. I'm getting them 34 cents, 36% yield. Right now, their best fund is ARMW. Based on the last three, 94 cents, 116% yield. The IV on ARM, which is a British semiconductor company, the IV is only 57%. So I got to drop it because they're overpaying. 71 cents, 87% yield. AVGW on Avgo averages 70 cents per share. I'm giving 66 cents, 63% yield. Because again, the IV's not there. BABW on Alibaba averages 72 cents. I'm giving them 59 cents. I'm bringing all these back to earth. They're overpaying what the IV is. And, when things are down like they were today and have been, several times in the last couple of weeks, 67% yield on them, 59 cents. That's the pick. Not financial advice. This is total guesses. BRKW on Berkshire averages 16 cents. I'm giving 15 cents, 17% yield. Safer fund, lower yield. COIW on Coinbase averages 53 cents. These are all weekly, of course. 88% yield. I'm giving them 47 cents, 77% yield. COSW, this is Costco. People wanted Costco. Roundhill has a Costco. They're averaging, they paid twice, 24 and 21 cents, averages 23. And I'm giving them 24 because they're underpaying. So that's a 25% yield. Costco's, it's a great company. You're not going to get 100% yields from them, but I think you'll get more stability. So that is that. GOOW on Google averages 59 cents per share over the last 3. We're giving them 52 cents, 39% yield. IV's not there. Who on Robinhood, WHOW, averages $1.16 a week. Of course, it's a $64 fund. Remember, this thing launched at, did it launch at, I think it launched at 40 not long ago, a few months ago, June maybe. It's at $64, so you got the growth. It's paying 93% yield. The IV's only 70 now on Robinhood. So I got to bring them down, but it's still going to be a good yield. $2, 81% yield. METW averages 33 cents. That's 49% yield. I'm giving them 28 cents, 41%. We got a few more. Hang in there, guys. MSFW. This is Microsoft. Averages 27 cents. And let's see, that's 32% yield. I'm giving them 24 cents, 27% yield. Because again, the IV's not there. MSTW, MicroStrategy. It's paying 98%, 33 cents average. I'm getting them 30 cents, 87% yield. Yes, because the volatility, the premium, they're getting, it's doing well. And I think Strategy may have hit a bottom. They own a ton of Bitcoin, and the stock price is almost at the point. It's a 52-week low. It's dropped forever, but they own so much Bitcoin. If they sold all that Bitcoin, that value is almost more than the stock value, the book value. So maybe a bottom. We'll see. I mean, they're diluting shares. They're launching new, Class A funds and all that. We'll see. But I'm bullish on them, and I have been, and that's been wrong, but I really am. NFLW on Netflix, just 23 cents. I think they kept them, 23 cents, 31% yield. NVDW on Nvidia, very bullish there. In the few, 3 years, 5 years from now. But they're averaging 51 cents, 56% yield. I gave them 49 cents, 53% yield. Because their IV has dropped. Palantir Fund, PLTW, averages 99% yield, 82 cents. I gave them 78% yield, 65 cents. Because they are, again, that IV has dropped as well. TSLW on Tesla. I am bullish on Tesla. 61 cent average, 91% yield. 49 cents, 72% yield. Again, after the past couple of weeks, I think the volatility's been down. It's up, today. But, these aren't based on today. It's what they're going to declare tomorrow, which is probably from last week's income. Ubu, sit Ubu sit, good dog. That's on Uber. They have paid twice now, 77 and 54 cents, 69% yield. I am giving them 49 cents, 51% yield. And now Roundhill has some gold funds. They have GDXW, which is a gold miners. Vanette gold miners. They were down worse than the underlying by about 20%. And GLDW, which is on Spider Gold, they did better than the underlying. They were down 0.11, but gold, Spider Gold, was down 0.79. So what are they going to pay? Let's look at GDXW, the gold miners one. They've only paid once, 42 cents, 39% yield. IV is higher than what they're paying, so I will give them a raise. 45 cents, which is a 41% yield, up from 39%. GLDW, Spider Gold, worst performer at 16% yield, but you can't complain with that. That's all the yields are good. As an income investor, I want the higher yields. I'm not as interested in the NAV loss. As long as it doesn't go to zero, keep paying me my money. I will keep reinvesting, which I do, and just build it that way. And then in 3 to 5 years, then I can start moving some distributions into some safer things, some more growth things. But I'm not there yet. Some of you are, which is why I cover all these. So anyway, GLDW, which is Spider Gold, paid once, 16 cents, 16% yield. And I gave them 20. I'm giving them a raise because Spider Gold the IV is 23%. They're only paying 16, so I'm giving them 21 cents, 19% yield. So that is the coverage on the predictions. As a whole, Roundhill is paying 57.4%. If you own an equal amount of all of them, that's awesome. So I love Roundhill. I'm picking them to only pay 50% on all of their funds. Again, these are the single stocks that declare tomorrow, but they have a declaration every day with their various funds. And I know a lot of you guys you get paid every day from the various funds. So it's a good time. You see the market today and you think this is terrible. The worst thing you can do is sell. Warren Buffett says, never lose money. That's rule number 1. You lose when you sell. If you bought high, you sell low. You're the average retail investor. That's not us. We are here for the long term. We will ride this out. I doubt the market will go to zero. Again, not financial advice. I doubt any of these funds will go to zero. And we'll just keep collecting money, buying more shares, and that's it. That's all I want to talk about. But I'm not panicking. And what I've noticed, when the market goes down so much in one day or up so much in one day, you see the opposite the next day. Because profit takers, the institutions, that's who we're up against. Market was so down today, they're going to scoop in and buy. And so are we. We're going to try and compete with them. So that's the coverage. All I want to talk about. Have a great day, everyone. Thank you for listening, watching. Join me in the chat. I will post this as a premiere, so I will be in the live chat. You don't know that yet till it airs. But anyway, love you guys. Have a great day.